You're listening to OPIS Talks, where you'll be in on conversations with insiders in the energy, chemicals, and environmental commodities markets. Guests share insights into the latest trends and innovations, industry challenges, and much more. Let's dive into the conversations that explore where the energy economy is headed, right here on OPIS Talks.
Hi everybody, I'm James Stevenson. I run the research group at McCloskey by OPIS, part of the Dow Jones organization. We wanted to have a bit of a chat with everyone on some recent travels that we've done, mainly including the Eurocoke 2024 conference, which was in Vienna about a week and a half ago. A very interesting meeting, and I had a number of other colleagues there with me, including Ranjana von Wendland, who is our business development lead for metallurgical coal and met coke. How are you, Ranjana?
Hi, James. Thank you. Very nice. And I know that we've just come back from Eurocoke, but what a change. I mean, we're going to talk about it later, but the market has completely changed since we were at Eurocoke. So let's discuss about it in a minute. But yeah, you were there at Eurocoke. We had some very interesting meetings, and you were at Coal Trans also. So we're going to catch up about all that.
Yeah. Why don't you kick off? We did a webinar on Brazil a couple of months ago, and I think the first thing we talked about was just kind of the general mood. What was your read of the mood in Vienna?
It's interesting, James, that you asked the mood because I just had a very interesting lunch meeting today, with one of the European steelmakers. I'll come to that in a minute. But talking of Eurocoke, the general mood of the market was very, very bearish, to put it mildly. So in Europe, particularly, there are things like falling European steel output, strong steel imports, and ample availability of raw material were the key themes at Eurocoke this year in Vienna. So market participants, when we met them, they told us that poor demand from Europe and Asia was forcing United States coal miners to implement both production cut and wage cuts. And I think in one of your conversations, you had also mentioned that there was this one miner which had already introduced some sort of wage cuts. Others were thinking about it, but they could also implement some production cuts, which you were discussing. For European buyers at the moment, they are contending with rising stockpiles at both steel mills and terminals. What it means is that some of the term cargoes from Australia, which were destined for Europe, are now being sold on the prompt market. And this also we are going to discuss in later when we talk about the prices. We also had a lot of attendance at Eurocoke from Colombia, Colombian suppliers of met coal, met coke, ULP nut coke, and they all said that how slow prices for met coke were forcing producers to curtail production. And I'll just quote one of the suppliers over here. And this particular supplier said that there are cokeries in Cucuta and Boyaca, which are curtailing production by something like as much as 70%, right? What we had seen during the week when we had the Eurocoke conference, that met coke prices had fallen sharply with McCloskey's Barranquilla index 65-63 falling to almost 256 FOB for the week ending 20th September, which is down from 320. I just want to stress on the figure like 320 FOB same time a year earlier. So you can see the prices have fallen very sharply. In addition to this, there is an increased competition from Indonesian met coke imports. There was like a lot of Indonesian suppliers who were there who are actually targeting the Atlantic market. It was interesting, but yeah, the mood was very, very bearish for European participants at Eurocoke.
Yeah, and we did a piece on that Indonesian kind of competing its way into the Atlantic Basin, both in our Steel Raw Materials Daily and also in our monthly met coal market briefing, which is our research deliverable. We can talk about Coal Trans Bali and so forth next, but why don't we fill us in on the last couple of weeks? Obviously, the market's changed a little bit.
Yeah, you're absolutely right. I mean, as I said, that I had a meeting earlier in the day as well with a European steel producer. And the interesting thing was that when we were in Vienna, we saw PLV at in the 180 range or slightly lower than 180. And guess what the price is today? So there has been a resurgence, as I would say clearly. So today, according to McCloskey assessments, which is our MCC1, which is Australian FOB low vol prime hard coking coal, the prices were higher today at around 204. And this was because there was a trade done on a coal trading platform today. And we understand that an end user has sold a 70,000 prime hard cargo to a trader at the price which I just said right now, with a seller's option of peak downs, BMA, PLV. For loading in November Lake, and in all likelihood, this cargo is likely to go to China. Even for Chinese coke, and we know that China is one of the largest suppliers of coke. What has happened is that producers have implemented their fourth round of coke, and for Indonesian coke also, offers for November loading have risen to around 265 FOB today, and compared to trades which were done at average of 249 FOB a week earlier, right? And in this case, we've also seen that Indian end users, they have also indicated buying interest for November cargoes for Australian prime hard. So overall, I think the sentiment in the market has certainly improved. There's also, like, we are having the golden week in China, which created a bit of tightness in the market. There has been a Chinese stimulus, and I think on these kind of factors, you can also elaborate a bit that how the Chinese stimulus has come in. It has lifted the sentiment of the market for sure across the spectrum.
It really has, hasn't it? And it's funny, over the last 2 years, I guess, we've probably had 2 or 3 stimulus announcements out of China per year. And until this one, I was kind of coalescing on the view that the days where a Chinese stimulus announcement were market moving were probably done. All right. None of the previous ones really moved the market too much. And in some ways they hurt the market, because I remember in Coltrans and Eurocoke 2023, these two conferences are kind of back to back, there was a lot of discussion about buyers, particularly in Coltrans in Bali, that they weren't going to overbuy. They want to be careful about how much contracting they did. And then right after that event, there was a stimulus announcement, and people kind of drank the Kool-Aid on it, and they locked in a lot more cargoes than they ended up needing. And that went some distance to putting the market in the position it's in today, which is, the high inventories and so forth that you're talking about, end users being, the biggest sellers in the market. So it's interesting, though, that this particular stimulus does seem to have at least improved sentiment. And I think the difference is scale. This is bigger than the 4 or 5 that preceded it. I would say I think I'm still in a bit of a wait and see mode. It takes a long time for stimulus money to really permeate the economy. It'll be interesting to see. There are a lot of headwinds pushing against steel production, particularly in China, and it'll be interesting to see just how far these can kind of go to offset those headwinds.
No, that's interesting. And now I just want to take you back a few weeks when you were in Coltrans Bali, right? And I know that when you're in Asia, I mean, you've seen that in your experience as well, that the fulcrum of raw materials and steel, it lies in Asia. So, what was the mood over there when you were at Coltrans? You were chairing a panel. You met with everyone. So, how was the mood over there?
Yeah, I mean, it was kind of similar to Eurocoke. It was generally bearish. Obviously, it preceded the stimulus announcement. There wasn't much hope for near-term improvement in pricing at all. And, there was this, the anecdote I just said about people having overbought 12 months earlier, that was very much present in people's minds, and with some sort of a resolution not to repeat history. Also worth noting, Coltrans Bali was traditionally a thermal coal conference. There were Colombian met coke people there. There were, of course, the Indonesian coke producers, Chinese coke makers. It is very much a met coal and met coke conference as well. But yeah, similarly bearish mood to Eurocoke. I think probably the positives I would say, we are still in a global market, even though demand has disappointed relative to expectations. Demand is still relatively strong. The problem isn't demand. Well, there are plenty of problems with demand, but the pricing problem is that people bought expecting more demand. That's really the ultimate bearish driver. Underneath the near-term pessimism is, on the producer side at least, a real feeling that they're sitting on gold mines, that this is a structurally tight commodity and better times will come. And that's why I think, to the first point you made about some cost cutting, people are trying to cut costs. People are doing what they can to remain above water in the current market, but I'm not hearing of anyone who's planning on closing a mine or laying off or anything like that because they know they need to be around for when the better times come.
James, I agree with you over here, and I think this was a theme. I was attending the London Metal Exchange Week as well, and over there I happened to meet some like investment bankers and all, and I think they were all maintaining a big buy on coking coal, right? So for the foreseeable future, I think we can say that the supply tightness, and this is one thing which you have been emphasizing in your discussions with the clients and with the industry and in your reports, that the story of coking coal and met coke, it stays very strong. There is supply tightness is there in the system to stay for a long time.
Yeah, actually, I did a podcast for Barron's Live, which is publicly available for anyone listening, just the other day, and we were talking a bit about coal equities, and it still boggles my mind. You look at Warrior Met Coal, for example; they were $8 a share 3 years ago, and now they're 62, something like that. Alpha Natural Resources was as low as 4 and hit 400. And with the bearish market, they're now sort of 230 or something like that. But you're right. There is, people see that there are opportunities in this space, and people who are able to invest are doing so. Now, unfortunately, those investments are in things like coal equities or existing assets and stuff, and we're not seeing nearly enough investment in supply, which we'll talk about a bit later.
Yeah, no, makes sense.
It's one of these things with conferences. You attend, but you don't necessarily get to see too many of the presentations. I would say Eurocoke, relative to some other conferences, has a very solid lineup of talks. Anything you saw that stood out, Ranjana?
Yeah, I think there were a few presentations. Like we had an amazing presentation from SAIL where the presentee from SAIL was talking about Coca One and best practices. On the sidelines, when I spoke to her, she said like for an Indian company like SAIL, the important thing is about ESG at the moment. So they are mostly a blast furnace driven economy as far as steel is concerned. So even though they would like to cut down their carbon emissions and have more EAFs or cut down, but the whole thing revolves also around ESG, which is you can talk about carbon emissions, but they are a large employer as well. So for them to take any decisions to change a blast furnace or to make it into a EAF or to cut down carbon emissions, everything has to revolve around the employment in those particular areas, right? And in India, some of the steel mills happen to be in some of the states where the deprivation levels happen to be high. Those kind of factors, I think, when you look at Eurocoke, when people present on the wider picture, which is steel mill or a coke plant or a cokery, being not just like a provider of steel, but encompassing the entire society or the providing employment to thousands of people, that came out very strongly when I was listening to the sale presentation and having a conversation afterwards. But they are still working on processes to improve their coke furnaces, how they're employing new technologies, every step how they can cut carbon emissions. So I think these are the things which stood out for me. And obviously you had some interesting presentations which you were attending, and you said some of them really stood out for you. What was the main presentation which you really liked?
My favourite was Barry Tudor, who's the CEO of Pembroke Resources in Australia. They relatively recently, brought online the Olive Downs mine in the Bowen Basin in Queensland. And I think we've talked a lot, to get a greenfield coal mine up and running, you're talking 7 or 8 years. All of the challenges around permitting and leasing and, attracting labor and all this stuff. But what Barry presented was really a lot of the color and nuance within that narrative. Olive Downs is very impressive technologically. Okay, it's all driverless trucks, as much automation basically as is possible. They've been very clever in making sure that they are fully permitted for prospective growth, because they recognize that permitting and leasing and so forth is very risky territory. You get a change of government or a regulation, whatever, you might be totally screwed because your plans can no longer happen. So they've been clever in locking stuff in advance. But what really struck with me was they have built a wildlife research center at the mine. And, he had pictures of koalas and all this kind of thing. But hiring full-time scientists and technicians and so forth to run that. They also have an Indigenous Heritage Centre at the mine as well. Now, these are, I think, are very laudable things, and they exactly align with what the lady from Sale was saying about, ESG investment is critical. Barry made the point, you can't just go in and mine and return everything to how it was. You have to make things better than where they were when you first came in. Now, he cited an obvious benefit, because I asked the question, like, hey, have you been able to get labor? Because that's a global issue. And he said, one of the things that helps is, yes, first of all, people like to work at a state-of-the-art mine. But secondly, particularly, everyone, I think, but particularly younger people like to see, oh, hey, we care about nature. We're actually improving things. We're not just, making sure the koalas are safe. We're doing what we can to protect an endangered species and grow their populations and this kind of thing. It was a little scary too, though, because obviously these things cost. And a mining company is not in the business of wildlife sanctuaries. It's in the business of mining coal. And they've obviously had to put a lot of money and an ongoing cost into maintaining this thing. And that's why Barry said when he was concluding, I think this will be the last greenfield project in the world. I don't quite agree. I think ones like Whitehaven's Winchester and perhaps one or two others, but it's certainly one of the last few. So I thought that talk was very eye-opening.
Yeah, no, that's interesting what you said. I think what I felt is that when you are at these conferences, you do tend to meet, and some presentations do stand out more than other, or some conversation which you might have with industry participants, they do stand out, or those words stick out to you, and you just remember them. So great points over here. I just there was many topics which we had discussed, and I think pricing was one of the key ones which came about, and you just asked me that where have the prices gone. So yeah, certainly there's been a rally, and now the question is, where do we go from here? So in your forecast, and I know that we do have a wonderful research report which comes out every month, which is called as the Met Coal Monthly Market Briefing, where you give us a wonderful picture of the entire global met coal markets. You talk about research, you talk about forecast, you talk about what is happening on the markets now, and it gives a clear perspective to a reader. So where do you see the market in the next 1 year or 2 years? What is your estimate, Dr. Stevenson, over here?
Look, I think it'll be mid-year before we get meaningful improvement. Now, the big caveat I would say, though, is markets can get lit up and they can, sentiment can turn positive quickly. And if, the return from Golden Week and perhaps the stimulus, perhaps there are some upside risks there. But I think in general, we are still dealing with a China, where real estate is really struggling. We're talking to some Chinese nationals, and they were saying, we're happy we bought an apartment 10 years ago because prices are down 30% over the last 2 years, but we're still ahead of where we were 10 years ago. But obviously that's painful if you only bought your apartment 2 years ago. But everyone knows, I think, in the audience about all the challenges around demand in China. There are risks around protectionism and stuff. I think it's going to take some time, right? I think demand will steadily improve globally for steel. The growth is going to be pretty muted in, Europe. I think, next year probably down still, probably flat at best. China, we do expect to continue to decline, but, relatively steady in many other places, and some growth in India, some growth in Brazil, some growth in Southeast Asia. And so net of net, I think we will get a bit of demand growth. The thing I keep coming back to is that we have lost Grosvenor, Anglo-American's mine in Queensland. We have just had the return of Longview, one of the I think the newest mine, I think, in the United States. However, it's only running on continuous miners, and its longwall production is probably a few years away as well. This creates a hole, right? And right now the market doesn't really care because there's a lot of coal, there's a lot of inventories are high and demand isn't great. But when inventories normalize and when demand recovers, buyers are going to be coming into a market that has lost about 6 million tonnes of supply. The whole prime hard market's about 120 million tonnes. Longview is probably not really prime hard, but it's certainly a good quality hard coking coal. I think it's probably mid next year that those inventories get down to the point where buyers need to get out into the spot market and start increasing their buying. It could be later. My fear is it could be later, particularly, one thing that we had been expecting for a long time was the development of a La Nina that would impact global supply, particularly supply out of Queensland and also Indonesia.
Yeah, I was coming to the La Nina question to you, it's something when we were at Eurocoke, there was a lot of discussions around La Nina, right? And so what were the main key takeaways from those discussions, and do you see any implications of those on your forecast? I know you've talked about, how the second half of next year could see a revival. So is there anything else you would like to add to it?
Yeah, look, La Nina's been this moving target. And I suppose to a degree it always is. And back 4 months ago, let's say in June, we had agencies, meteorological agencies around the world saying, oh, yeah, we'll have La Nina as early as August. And then over the 3 or 4 months since then, there's been more uncertainty coming in. And so the latest view that the Australian Bureau of Meteorology puts out is that there's a 50% chance of a La Nina this year. Their model is not calling for La Nina, but they survey 6 other forecasters, and 3 of those forecasters expect La Nina this year, 3 don't. Either way, they say, look, if this La Nina develops, we're going to dip into La Nina territory a little bit, meaning a weak La Nina, and then we'll dip back out, within a couple of months afterwards. So that does not sound like an impactful La Nina, which means that, La Nina can pull 3 million tonnes a quarter out of Australian exports easily if it's, an impactful one. That is, I think, bad news for people who want stronger coal prices and want them soon. It's still very uncertain. Okay, these guys openly talk about how climate change has made their modelling harder. All right, they're trying to educate models on a moving climate background, right, where they were, they've always been educated on sort of this assumption that, the last 10 or 15 years are pretty applicable to the next 10 or 15. So, it definitely, and it will still be rainy season in Queensland, over the Australian summer. So that can certainly impact supply. But we did reduce our price forecast for Q1, Q2 on this essentially expectation that La Nina won't be very impactful. I think it reinforces the idea it's probably next year, mid next year, before this market right sizes, with risks that it could take a bit longer than that.
Yeah, exactly. I think one thing which I want to talk about from the Euro Coke was the Coke part of business, right? So, what for me in particularly, like since Met Coke has been one of my pet markets, and you know that I've been covering it for like I don't know 7 8 years now with the in the entire Atlantic. So, from Euro Coke for me for Coke, the main takeaways was that we did see Coke prices fall quite a lot, but overall the Coke trade has been growing, and what we see is that buyers of steel makers in Brazil and in India, they have been buying more Coke recently because Coke prices had fallen. So the buoyancy in the Coke trade, it exists. What happens is that prices have fallen. So that's like a blip, I would say. But overall, talking about Coke business, we see the Coke trade growing. Capacities for of Cokeries are increasing, and we have more coke coming into the system, particularly from Indonesia. Like Indonesian suppliers are adding almost like 1 to 2 million tons, I think, in this quarter and last 2 quarters combined together. That's what the estimates which I have heard, and what it means is that overall the coke trade volumes in the seaborne market have increased, which if you look at a commodity a few years ago was not tradable that much. So we see more liquidity in that market, right? And this is one reason for McCloskey, like our whole goal is to create transparency in markets where it lacks. So we have price assessments relevant to coke market for Barranquilla 6563, Rizal Coke 6563, ultra low phos coke coming out of Colombia, and we are also assessing Polish coke CSR 6260X works in euros per ton. In addition to this, we have a CIF ARA number, Indonesian FOB. So I think for us, we are in fact like covering all aspects of coke trade, and the response to our indices at Eurocoke, as you know, was quite good, well received, because it's creating a transparent market for everyone.
Yeah, and it's clearly a tool that is needed, and we do focus our efforts on building tools that are needed. So obviously those are getting used in contracts around the world. With regard to Coke, it's an interesting dynamic. It makes it harder to model, right? It used to be that there was sort of a steady amount of Coke trade, and that was fine. But adding particularly Indonesian supply, like supply out of Colombia, is positive for global coking coal / Coke supply because it's new, right? It's been there. Colombia exports coking coal and Coke, but the Coke comes from the domestic coking coal, of course, and it's genuinely adding supply to the market. Indonesia is an interesting one, though, because that's really importing primarily Australian coal, although coal from other countries as well, and turning it into Coke, and then on selling that Coke. So it's sort of like a middleman in the global kind of coking coal / Coke S&D, and that's a tricky one because does that go to integrated mills who just don't make their own Coke because they can buy it cheaper? I mean, that's clearly been happening. Obviously you can go to furnaces that don't have their own, that rely on merchant Coke, but it really creates a changing dynamic. And as you said, it's only going to grow. We got some pretty meaningful growth expectations for Coke supply over the next couple of years. Kind of on that, though, you talk to these Coke producers all the time, as well as coking coal. I gave our view. What are you hearing in the market? Like, what are people out there thinking in terms of timeframes for prices improving?
It's pretty much in line with your view, I have to say. So people, like, obviously we've seen recently the price improving. The whole idea is that we dip to 180 and slightly below that, but people don't see returning to those levels. It's also like from the second half of next year we'll see prices improve more, but it will stay within the range what we are seeing at present. But there's a lot of, the thing is that, as you said, there's a lot of uncertainty, or how the stimulus package in China, what kind of impact it has on the market, how fast do Indians start buying more of prime hard coking coal in the prompt market. So I was just having a chat with our Asia colleagues the other day, and what they said that it's not that Indian steelmakers are not buying coal or they have stopped purchase or anything. It's just that they have changed what they are buying. So they are buying more of off-spec material. They have started buying more of Russian, and they have started buying more of US material. They are taking both prime low wall and mid wall, but obviously they have diversified their procurement sources as well.
That's a big theme we hear about, isn't it? Because, I mean, as an example, when I was in Bali, there were conversations about how coke makers in Inner Mongolia are not using any prime hard coking coal. Even coke makers around, or mills around the Bohai Rim, whose specs normally they would use about 40% prime hard, only using about 20%. We hear about stamp charging in India and things. So the market is sort of reacting and reacting to, I think, prospective tightness, particularly for prime hard, and is kind of coming up with ways to manage that, and also just trying to manage costs. In economically, it's tricky to make coke profitably in some areas. If you use less prime hard, and maybe you can get around the coke strength issues, via stamp charging or something like that, but lower quality coking coals have less carbon. So if you go that route, yes, you can solve some problems, but you end up needing more coal. So there are some of these changes that are kind of bullish, ultimately, coking coal demand. But yeah, you're right. Absolutely, very quickly evolving market.
Yeah. Well, I just thought we'll take up some questions which we were asked during Eurocoke, and particularly one person asked us about the potential impact of a ramp up in the Middle East conflict. So, what is your view on that? How do you see it panning out? Yeah.
Yeah, and it kind of has ramped up since then, right? It's very, very sad to see. Look, it's clearly pricing somewhat into global gas and LNG prices, which are then impacting particularly high calorific value coal, so 6,000 kcal. Talking thermal here, right? Not coking coal or coke. There obviously we've had vessels attacked and things like that. In the event there were open war, hopefully that doesn't happen, of course. If that open war included Iran, then maybe there are risks around the Straits of Hormuz, for LNG transiting. I think things like that, right? But none of these are anywhere near our base expectation. I think there's going to be a bit of a risk premium. And I think for thermal coal, it's amounting to maybe $10 a ton for, API2, say, Northwest Europe. For coking coal, I think not too much of that goes through the Suez Canal and the Red Sea. It's all reasonably removed from it, I think. So I think the coking coal and coke markets are less impacted. They're, obviously, we're still living through repercussions of the war in Ukraine. But I think the Middle East, unless it really does erupt into open war, I think we'll probably continue away where we are now. All right. Well, listen, hey, thank you everyone for listening. Hope this has been useful, and look forward to doing this again soon.
We hope you've enjoyed today's insider conversation on OPIS Talks. Join us next time for a deep dive into another industry insider's world. You can find more OPIS Talks episodes at opisnet.com/podcasts or wherever you listen to your favorite podcasts.